What's up, guys? Das here. So a pretty calm day so far in the stock market today, with the S&P 500 up $6, up 0.2%. The Dow Jones down $2, down 0.01%. Now it's going up, so it's pretty much break even, with the Nasdaq currently up $82, up 0.85%, completely crushing the rest of the indexes here, as big tech doing what big tech does best, holding up the entire market, as FANG and Microsoft, they're all doing pretty well today. And in this video, we're going to talk more about the markets, breaking down some technicals, and I want to go over a bunch of key levels that I'm personally looking at, as well as a bunch of stocks that I'm looking to buy as we're getting deeper and deeper into the month of June here in 2020. So if you guys find value in this video, as always, hit that like button for me. Let's try to get 350 likes on this video, and check out all the free links down below in the description box if you want to be further connected with the Strive Smart community, and if you want 2 free stocks from Webull valued up to $1,400 if you deposit $100 into the account. That's all linked down below in the description box. So let's get into the video, starting off with the S&P 500. And again, it's a pretty calm day today. As we're talking right now, the markets are live again with about an hour left in the session, and the S&P is clearly failing at 3140. And let me break down some levels here on the S&P that are very critical. And looking at this intraday chart, it's pretty evident that the S&P is trading within a range. There's actually 2 ranges here within the overall range. The overall range is between 3110 and 3140. So that's a range of about 30 points. But within this range, there's 2 ranges, one being from 3110 to 3120, and the other one being from 3120 to 3140. So it's clear that yesterday we actually held 3110 quite nicely, which is good, and we actually broke out of it and held it as a support heading into the close, which was also good. And that bullish momentum that we saw heading into the close yesterday, that continued into today. But you guys can see, although, yeah, the overall uptrend is continuing on the 4-hour chart, going back to that intraday chart, we failed to break out of 3140, which wasn't that good of a sign for the bulls, right? So at this point for the S&P, and you guys can see as I'm speaking, we got rejected again at 3140. Now we're going down to test 3120. For me, if I'm looking at the markets from a bullish perspective, and when I'm trading stocks, guys, I try not to be biased, right? I try to trade the technicals in front of me. But looking at this from a bullish perspective, I need to see the S&P take out 3140 and ultimately take out 3150, which was also a high from yesterday, right? So these levels need to be broken above before more bulls start coming in, and before we really start to push up to maybe test the top level of this channel. And you guys can see, if we start to test the top level of the channel being around 3,200, 3,300, we're going to be closer to all-time highs. Obviously, that's going to be the continuation of the uptrend. But for us to get there, again, we need to get out of this range. We need to get out of this 30-point range that we're in. We need to break 3140, and ultimately, we need to break 3150, which, again, was the high from yesterday. So I'm thinking we're in a point of consolidation at this point. The markets are kind of cooling off. So either tomorrow or Friday, we're going to end up picking a direction, whether, again, that's up if we break 3140, and it can also be down, right? A couple downside targets we have here are 3110. If we break that part of the range, that wouldn't be good for the bulls, right? We might be going down to 3085 to 3060. That's another pretty prominent range here on the S&P. And if we break 3060, guys, watch out. We might be going to the low 3000s, 2950, which is the general area that we actually held after the big sell-off that we saw in the markets last week, right? And that sell-off was about a 6 to 7% sell-off, which is quite substantial, especially in the span of 2 days, which is absolutely unbelievable. So these are a couple of levels that I'm watching on the S&P. Another one that I'm watching here, just watch this wedge, guys. You guys can see I have a wedge pattern drawn out here. Let me actually redo this to update it based on what the trend's looking like now. So keep an eye. Even heading into the close of the market today, guys, in Power Hour, and Power Hour is simply another term for the final hour of the session. In the final hour of the session, a lot of the times things get hectic, right? We might squeeze up into this wedge and break 3140 literally in the next hour. That could happen. And as you watch this video, the markets will be closed, and you can go on your ThinkOrSwim platform or whatever charting software you use and see exactly what actually ended up happening. So the S&P, those are a couple of levels that I'm watching here. And when it comes to the Dow, guys, currently down $50. Like I said yesterday, and the same pretty much stands today, since we're really just break even. We haven't gone up or down an immense amount. We're still in the middle of this channel, right? We're in the middle of 25,800 to 27,000, right? We're pretty much in the middle of this 1,200 point range, and we're consolidating. You guys can see it on the 5-day, 5-minute. We found this temporary bottom at 25K. We broke out of 25.8, which is a good sign for the bulls, and now we're just calming down. We're consolidating. We're, just laying low. Let's just put it that way, right? Before the markets end up, picking, the upwards direction or the downwards direction. The Dow Jones is really in a range between 26,400 right now and about 26,150. So watch what it does tomorrow in this range right here on the 5-day, 5-minute. We have, again, upwards targets of 27,000 with the downwards target being 25,800. And when it comes to the Nasdaq, again, stealing the show today, guys, cracked above 10K, up 0.7% right now. And there's really not much to say about the Nasdaq, quite honestly, other than it's continuing the uptrend. We pushed to a higher high today. We didn't hit an all-time high. We did last week, but we're pretty dang close again. And now it seems like we're just, pulling down a bit, cooling off a bit, heading into the close of the market. But ultimately, if we hold the EMA line here on the hourly chart, as well as yesterday's high heading into the close, that would be a good close for the bulls overall, right? And you guys can see it even better on, let's say, this 5-day, 5-minute chart, right? It's pretty imperative, I would say, at least from a bullish perspective, that it holds 10,000. Will it? I don't know. I mean, another good level, or another level it should hold, let's say if we break 10K, should definitely be 99.60, right? This 180 SMA on the 5-day, 5-minute chart. So those are a couple of levels that I'm watching here. When it comes down to, the overall indexes and the Russell 2000 right now, we don't always talk about it, but I like mentioning it sometimes here on the channel. It's the small cap index. This one's actually down over 1% right now, down $15. So that's pretty interesting here. And that's kind of typical, right? When the markets are having a very strong day, typically the small cap index does the best. And when the markets are kind of break even, going down even, usually the Russell does the worst, right? And that's kind of, again, what we're seeing right now. So let me know down below in the comments, guys, what are your thoughts on the markets? Where do you see the markets heading over the next couple of weeks, the next couple of days? And you guys know right now, Jerome Powell is testifying before Congress. Yesterday, he spoke on the 16th of June. Today, it's actually live right now, I believe, as I'm actually filming this video. Today's the 17th, so I'll link that down below in the description if you guys do want to watch that. It's pretty good stuff, especially if you want more insight from the Fed chairman himself on the economy, challenges, where he sees the economy going forward. He answers a bunch of questions, challenging questions at that. I'll link it again down below in the description, and I'll link yesterday's video, yesterday's testimony down below in the description as well for those that didn't catch that and actually want to catch up on it. And another thing that, again, the markets are kind of not volatile, they're kind of consolidating today, but one thing that pushed the markets up yesterday was a potential infrastructure bill here that President Trump is trying to impose. It's essentially another $1 trillion stimulus that's going to really impact the infrastructure across this country. So Bloomberg said that most of the funds of this $1 trillion would go to work in roads and bridges, and the rest of the funds would be devoted to improving 5G and rural broadband, confidential sources said. So that is, in my eyes, good, but you guys have to realize, and if you've been following, the presidency, Trump's actually been trying to get this bill through for a couple of years now. Trump has been pushing actually for a $2 trillion infrastructure plan for most of his presidency, but it's been unable to get through Congress, right? And many people are saying that this infrastructure bill, the $1 trillion bill, is far-fetched. It's obviously an election year. Are they going to let it go through at this point? Probably not. It's pretty far-fetched, but it did end up pushing up the markets, and we'll talk about two stocks, one ETF here that I'm actually looking to potentially trade on the slim chance that this actually does end up going through. And again, obviously, funding has been a major striking point. It's been a major issue when it comes down to the infrastructure bill. And it's really because Republicans and Democrats, they're not agreeing on how to pay for this, where the funding is going to come from. So it's just, again, it's pretty far-fetched that it's actually going to come into fruition. But two stocks, again, one ETF, one stock. Let's start off with the stock here that I'm watching, and we'll get into my trades in a second. Caterpillar, ticker symbol CAT. This is one that, if this infrastructure does go through, this bill does go through, Caterpillar, having all the machinery, it being a conglomerate company, this is going to do very well, in my opinion. It could potentially see a spike, from the 130s. We see a resistance here at about 140. It could really easily fill that range. That's a trading range of about 6 to 8%. So watch out for Caterpillar here. And an ETF, I believe there's 135 stocks in this ETF roughly. It's the iShares US Infrastructure ETF, ticker symbol IFRA. This could also be a play. As you guys can see, if we go to the 5-day, 5-minute, this thing has been quite volatile. It actually went up to $28 yesterday on this news, right? That was a spike of about 10-11%, but since then, it's cooled off. Today, actually, it had another spike up to about 26, but it's cooling off again. But either way, on the slim chance that this does get passed through Congress, this plus Caterpillar plus a bunch of other stocks could do very well, especially if, obviously, they're in the infrastructure, the building of the infrastructure, if they, provide services, the parts, the machinery, this, that, and the third. If they have anything to do with that, they can do well in terms of the company, and thus the stocks of the companies, they can do well as well. So those are two to keep an eye out on this potential $1 trillion infrastructure bill. And as in terms of what I personally did in my trading today, guys, I didn't do much at all. You guys know that I'm holding NEO stock. I'm still holding on to NEO stock. I bought yesterday on this dip, I believe at 660 in the mid 660 level, bought more in the 670s. I'm still holding on to those shares, and quite honestly, I'm being patient here in the market, guys, and that's not changing. It hasn't really been changing, quite honestly. Ever since the market's been recovering, I've been patient and more cautious, right? And especially now, as Powell again is testifying, we're in a pretty interesting spot in the markets itself, as we did see a massive run over the past couple of weeks. And I'm just laying low. I'm being patient. I have a lot of cash waiting, and I'm still playing offense at the same time, but I'm playing a lot of defense at this point, again, stacking up that cash. And I'm waiting to see, again, going back to the S&P, what direction are we going to pick? And as of now, the S&P is negative, guys. We didn't break 3140. We're starting to break 3120 now on the downside, and we might test 3110. So I'm not interested in putting too much money to work in terms of swing trades quite yet until the markets, the S&P that is, does end up showing a breakout of this consolidation range. So let me know down below in the comments, guys. Again, what are your thoughts on the markets? Any trades that you've been making? Now let's talk about a bunch more stocks that I'm looking to trade right now, that I'm actually looking to buy, starting off with Beyond Meat. And this stock, this company, it just keeps getting good news after good news after good news, right? Good catalyst after good catalyst. And you guys recall about a week or two ago, they got a good news from China, 45,000, I believe, different, they're distributing the product to 4,500 different locations, right? And that, in China that is, and that pushed the stock up from 135 up to 162. Literally, it was up $30 in one day. And you guys can see we pulled down a bit, we consolidated, we cooled off, and ultimately now we're headed back up, right? The uptrend's continuing on the hourly chart. That's a very good sign. So why is the stock up again today? It's up 3%, but realize, guys, it was actually up way more before. It was actually up to $167. Now it's down to $156. So at one point it was up 7, 8, 9%. And that is because they're introducing a new value pack of burgers. It's called the Cookout Classic. And this launch will provide a value pack with 10 burgers. So if you're looking to buy a value pack, of these meatless burgers, now's your chance, right? They're launching it in the summertime, which is great. A lot of barbecuing here in the United States. That's a pretty good move in my opinion, right? And get this, we'll break down some numbers behind this to compare it to traditional beef. This is pretty interesting here. The 10-pack has suggested a retail price of $15.99. So $15.99 for 10 burgers, or $6.40 per pound, bringing it closer to the price of traditional beef. And get this, guys, beef patties were selling for about $5.30 per pound this week, according to the U.S. Department of Agriculture on advertised beef prices. And this launch is going to start on June 22nd, the week of June 22nd, in Walmart and Target locations and other select retailers across the U.S. So the fact that they're trimming down the per pound price on this meatless product, that's a very good sign. Very good sign when you're looking at it from a business perspective, because more people are going to buy it at the end of the day, guys. Even me, right? I'm not a vegan by any stretch of the imagination, but I've tried it before, and one thing that's deterred me from getting this product more and more is the price, right? Is the price. It's more expensive than traditional meat, but now they're lowering this, competing more with meat, and on top of that, we know that there's been meat storages. I'm not sure if there's more meat storages now. I'm sure they're still having problems, but back 2-3 months ago when the whole crisis started, there was a lot of meat shortages that was driving, more sales to Beyond and so forth. And now with the price increase or decrease and this new Cookout Classic bundle, that's very good for the company. So for me, I love Beyond Meat here, especially as a swing trade, down from 167 to 157. That opened up about 6% potential for profit. So this is definitely one that I'm looking to pick up. Maybe even I pick up some shares after this video. Maybe, just maybe. And I'll let you guys know, of course, in tomorrow's video if I ended up doing that. So the next one on the list here is Tesla. Although Tesla's not at an attractive price right now, I've been getting so many questions about it. I'm going to cover it right now. So Tesla obviously hit an all-time high over $1,000. Congrats to Tesla shareholders. That's unbelievable. I'm also a Tesla shareholder, so I'm very happy about that. And we pulled down to $900. We held an old resistance as a new support, right? Very good sign. We held a higher low on that 180 SMA. Very good sign there as well. We broke above 940. We broke above 965. Now we clearly failed at about 1020. That's a resistance from back on the 10th of June. We pulled down. We held 965 as a new support. That's very good for the uptrend. And now we're kind of caught in between 965 and about 1020, right? So this is putting Tesla, again, in a pretty funky spot where it's not too attractive for me when we're looking at a risk-reward perspective, right? I would have liked it much more as a swing trade from a risk-reward perspective if it was in the low 900s, right? So for me at this point, guys, I might get in on this mini dip here that we are seeing. You guys can see the uptrend is continuing if we're looking at the past 2 days of trading. So this is a good dip right here, I believe, at 990. If it ends up holding this, we could end up rallying up to 1020. Maybe not today, probably not today, guys. That's near impossible at this point. That it just jumps $30 out of nowhere unless we get some surprise catalyst. But maybe tomorrow we might continue this and go to 1020, right? That could be a possible move here in Tesla. That could yield about a 3% profit, if we go in at 990, exit at 1020. And quite honestly, guys, that's what I'm looking for at this point. If it breaks this trend on this 5-day, 5-minute, and it starts to go 965, I'm just not going to get into it, quite honestly. But if we do pop 1020, and we break that even, there could be another all-time high in Tesla in the short term here. And that's kind of, again, what I am anticipating. And a couple more stocks. One is Work, ticker symbol WORK, Slack Technologies. This is up 20 cents almost today, up 0.5%. And if we take a look on the 4-hour chart, guys, it's very clear that we took a massive drop from 41 down to $30. That's pretty obvious, right? And during that sell-off, we actually held a pretty critical point, being $30, right? That's been an old resistance from back in April. It was actually a support back in the middle of May, and also it was a support from a couple days ago, right? So it's very critical that we held that. But before we get into Work, I need to see it break $33, guys, because I'm scared if I get in here, it could be a trap. You guys have heard of the bull trap term, right? Where a stock ETF index goes up a couple days, it drags in buyers before it dumps. That could be what's ending up happening here. You guys can see if we do end up dumping here, it could be a head and shoulders pattern, right? You guys can see the left shoulder here, the head as we popped up to 40. And again, if we fail out of 33, we fail to break out and we start to dump and we start to head back to 30, that could be the completion of the right shoulder. And if we dump below 30, that could be even worse for Work. So for me, I'm being patient. Again, I need to see $33 break. From there, I want to see a break out of 34. And I think anything above 34, mid-30s, Work could go back to the high 30s and even $40. So that's kind of what I'm waiting for when it comes down to some technicals here on this stock. And another one here is DKNG. I'm liking the way that it held 39 to $40 in today's session this morning, to be more particular with you guys. And you can see it here, right? We actually gapped down to 37 yesterday. We were at 38 this morning, but ultimately we broke out of, again, 39.40, which was a resistance, and the bulls, to push the stock higher, needed it to get out of that $40 level. So DKNG, DraftKings, guys, although I'm not buying it quite yet because we're still at a resistance at about $42, I like it. Either way, I like it, right? We broke out of the downwards pattern here, the downwards wedge, as you guys can see, from 45 down to 35. We broke out of that. That's very bullish. But at this point, I need to see a $42 break, which is why I have that alert there, and it hasn't been triggered quite yet. But if we do trigger that from 42 up to 45, that is the move that I'm looking to make here on DKNG. And another one that did very well today is Square, ticker symbol SQ. It actually filled up all the way to our price target from a couple of videos ago, being $100. This has been on an absolute tear, and now we're really close to all-time highs on the stock. The all-time high is $101.15 from back in October of 2018, and now we're trading back into the mid-90s, guys, so this could be an opportunity to pick up some shares on the dip here on the bullish momentum. So I'm looking tomorrow to see if it does end up consolidating a bit in the mid 90s, maybe at 95.60 to about 95.80, right? That's where I'm looking probably at this point to pick up some shares. And the last two are going to be video game stocks, ticker symbol EA, as well as Activision Blizzard. Both of these doing very well today despite the markets at this point turning red. S&P's red now about 6 points. Dow Jones is red 110 points, but the Nasdaq is still up 41 points. But either way, on a pretty choppy day, EA is up almost 2%. We filled up to the to the top of this channel, as you guys can see on this 90-day chart, right? We filled that channel gap, and now if we break 130, guys, this is what I've been saying, right? Watch out for 130, because above that, we might be going to $150 per share. As you guys can see here on the 3-year, 1-week chart, that is the next major resistance on EA. And when it comes to Activision Blizzard, guys, up even more than EA today, up 3.5%, almost up $2.50. We ended up breaking out of a key level up above $74. Now, next resistance being about $79.50 to $80. That's the price target that I have right now on Activision Blizzard. And if we go to that 3-year chart, you can see exactly why I have a price target at about $79 to $80, as that is a resistance from back in 2018, back in March of 2018 to be exact. So watch Activision, guys. Watch EA. Those are very hot stocks at this point. And to end off the video, as always, guys, I'm watching leveraged ETFs to play the market volatility. And these are ETFs that are not meant to be swing traded, but they're meant to be used as day trading tools for when the markets are very volatile, when they're selling off. And right now, guys, we're seeing a bit of a sell-off, and to maybe play that, we can look at SQQQ, which is an ETF that goes up whenever the Nasdaq is going down. You know, SPXS goes up whenever the S&P is going down, and they both have inverses, right? The inverse to SPXS is SPXL, which goes up whenever the S&P is going up, so you can really play both sides here. And TQQQ is one that goes up whenever the Nasdaq is going up, right? So overall, guys, that is it for this video. I hope you all found value in it. If you liked it, hit that like button. Again, let's try to get 350 plus likes on this video, and check out all the free links down below in the description box if you want 2 free stocks from Webull valued up to $1,400, and if you want to be further connected with the Strive Smart community. And to get those 2 free stocks, guys, all you have to do is put in $100 into the Webull account, and that's when you get it. I believe they settle in about 7 to 10 business days. That's when you'll get the stocks. So yeah, if you want free money, that's linked down below in the description. I'll catch you all in the next video. Thanks for the support. As always, peace out.